There is no other choice at this point. There's no way you can throw out 3 years worth of negotiation, start over with 3 months, and come to some sort of agreement. It's going to be a no Brexit deal in 3 months' time, and that's what the markets are telling you today.
So what's that going to look like then for pound as we approach that October 31 deadline? You know, there have been some suggestions out there that we could see between a 10 to 20% retracement for the currency. It's going to spell economic chaos for the UK. How bearish are you on what no-deal Brexit means for the UK economy?
Well, it's definitely very bearish. The problem that the markets have today is we're not sure of what the consequences are of a no Brexit deal. To what extent is Europe going to continue to allow trade? What are the tariffs going to be? How will the passporting of products and services to Europe change? Nobody knows the answers today. What markets are telling you today is it's not a good story. With the pound now hitting a new record low, we can say that there's going to be a relatively large impact, but it could get worse or it could get better depending on what in the end, what the tariffs and trade looks like post-Brexit.
Steve, it's Hadley out in Abu Dhabi. I mean, I couldn't help but notice in those comments from Boris Johnson a real Trumpian sort of stream of consciousness there. I'm given your experience of the U.S. president over the last couple of years and his particular style when it comes to negotiations, or no negotiations, as it were. I mean, where do you see the opportunities, potentially, given what we can kind of already see coming down the pike for the UK?
Well, in the UK, I think our mistake was we weren't short the pound sterling and long interest rates moving into well, Boris Johnson, but even before that, after the Brexit vote. The reason we weren't was because a lot of this was going to be driven by the political winds, and as an asset manager, we didn't really have any specialist insight into what the political landscape was going to look like. But I think as history has unfolded over the last couple of years, and particularly the last month, you come to recognize that it's not going to be, the political story in the UK is terrible in terms of delivering a Brexit that will deliver growth to the UK economy. I think markets have told you that that's just not going to happen, that the growth prospects are extremely negative. We're not sure how bad it's going to be, but this is an environment where you want to be long UK interest rates, you want to be short the sterling, and the only thing that really is going to lose you money in that trade is if Boris actually does deliver a positive agreement with Europe in the next 3 months, something that May failed to do over 3 years following that Brexit vote. So my view is it's very, very unlikely that anything positive comes out of this, and that markets are really reflecting a fairly negative growth story. And if you want to continue being short the sterling and long interest rates, your bet simply is it's going to look a lot worse than it does today. And that's certainly a possibility.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.